Hello guys and welcome to our 117th edition of the Trading Opportunities webinar. This is Nirav, and before we continue with the webinar, I'll just give a very quick introduction and what is this webinar about. So it's 1 second, and of course I have to check the audio before we proceed with any of that. So if you guys are available right now live, kindly let us know in the chat if my sound is being heard and the video is clear. Yes, thank you Martin, thank you Sushil. So everything is clear here. So let me just quickly get done with our small introduction here. So as you guys know, my name is Nirav. I'm the admin and owner of 50 Eyes Market Analysis website as well as YouTube channel where I've been publishing my views on the market since a very long time. And right now we are conducting this series of webinars called Trading Opportunities webinar. This is currently the 117th edition of the webinar. In the previous webinar, so far we have captured 285 trades. So including the trades discussed in the last webinar as well. Right. So when we proceed with the webinar, I will go over the charts of each of these things, and I will also discuss what was being discussed in the last setup webinar and go over with the current one as well. That being said, I'm also the author of the book Think with the Markets, which is available on Amazon's Kindle, which is electronic delivery platform, as well as and lastly, this is the way we'll proceed. We'll first discuss the chart of EURUSD, followed by crude oil, gold, S&P, Nifty, and in the end, we will discuss the chart of BTC or Bitcoin, right? And before moving forward, I'll just like to show off the accuracy of our past years of webinars, which has been always higher than 80%. As you can see, since 2016, 2017, 2018, it has always remained higher than 80%, which beats all industry standards and is a record for 6 consecutive years. Give me a moment, guys, before we proceed. I'll be back in a moment here. So yes, with that, all that being said, let's now actually begin with the webinar. I'll just check the audio again as I was interrupted for a bit here. Hello. Yes, working fine. So with that being said, let's now head over to our actual charts and discuss the actual markets rather than doing anything else. This is right. Okay. So guys, here we are with the actual charts, and first of all, we'll check the chart of Euro. This is the recording from our last webinar, and let's check what was being said in the last webinar on Euro USD. In the last webinar, our view was that we were seeing a corrective structure, A down, B up, C down, and we just got another alert. We'll check it in a bit. So the idea was that A down, B up, and C down was a structure where the C leg down may still have more downside remaining, right? And the setup was basically we will look for swing long trades, and I think I did discuss some specific levels, etc. Like long above 1.08936 was the conservative long, and so on and so forth. You can check the whole webinar for it, but this was the main theme: A down, B up, C down, flat correction, swing long perspective, and one more down leg may be still there, right? Now let's look at the actual chart of Euro. So here's the actual chart of Euro. Since our last discussion was on 24th, which was here, we can see that the correction did not end here. It actually did give us one more leg down, right, which was one of the possibilities discussed. And currently I'm holding swing longs on Euro as per our original discussion anyways. The idea still remains the same. I do want to see it cross 1.08898, 1.089, let's say, right? Above this, I might add more longs, but the current position itself is quite okay. or moderately sized enough. And the buy still suggests that the correction may still have some more movement to the downside remaining on this counter. For instance, we can still see the expansion of wave B and perhaps another leg, although it looks less and less likely given the strength of this impulse up. Right. So that's our quick bias on euro currently. As I said, I am holding swing longs. That means my stop loss is way lower, below 1.07 something, and I will of course change it as per requirement. The strategy is to enter partial longs when you don't have the confirmation, and once we see the breakout, we will enter with full size or basically increase the position. So long story short, that's the setup on euro, and if it works out, we expect some good upside movement. Of course, I'll trail it for just in case our analysis is not playing out as expected. But if it does, then we can see at least a 1:1 movement, which can take this market to quite some level. And roughly speaking, we can even check it here. So we can see levels of 1.10945 or higher. Right. That's our take on Euro USD, and I'll just check the chat at this point in time before proceeding further with the webinar. Hello, Martin. Hello, Sushil. And thank you for the confirmation, guys. And before we proceed our next chart, crude oil, just let me know if you guys have any doubts or questions on this particular chart. If not, I'll just proceed with the next thing. So let's just check what was being said about the chart of CL in our last webinar. Somewhere around here. So here it is, the chart of crude oil, and our discussion basically was that we were expecting that this market will continue sideways probably, and then leg down was expected. We were basically more interested in shorting this market, and my bias was that we will look for swing shorts specifically, right? The main theme was that 7980 being crossed is a sign that maybe something else might be happening, and the low, which was around 77, this low being crossed was a sign that we can enter shorts now. Now I am currently holding shorts on crude oil. However, counts have not played out. The theme remained the same, but there is a new update here, so that's what I want to show you. So here is the updated view, right? So our last discussion was on 24th, which is somewhere over here, and the idea was that this market is currently going sideways in a box range, which it really is still doing that. Right now, the additional count which I have over here is in the orange color. So I want you to focus on just that. And you will see that from this point of reference, if we consider the whole correction completing over here, we will find ourselves in a position where we can see a corrective ABC up. By the way, I'm talking about this whole impulsive correction from here till here. So here at this point of reference, which is the starting point of our count, we can say that we have a possible A up here, a B down, and then C up, or perhaps some other corrective pattern, complex or whatever the case may be. But one leg up might still be remaining, right? That's a possibility which we have to count, which we have to, keep in mind while taking shorts. So that's why my position is swing short. I am holding currently short positions. Will look to add more near the lows, but I have to counter for this wild move. If that happens, that will be a pretty substantial move. So accordingly, I've kept my position size. It can go as much as up to 83 levels before taking the downward movement, which is basically this white resistance zone. Right. So long holding periods are possible, and if we see a straight down movement, as I said, then we will just add more shorts and look for lower targets on this counter. 1 second, let me see if there's anything else to add here. Yes, so if we see straight down movement, then we will consider this as the end of wave 5. As you may have observed, I have two hypotheses, one in bluish color or cyan color and other in orange. So the bluish one is suggesting that if the 5 is complete here, we are seeing a corrective structure, a flat kind of correction. This box range is a correction. Basically, a flat looks like this. in Elliott Wave terminology. So flat correction ending here, and that suggests that new downside is expected. Similarly, if we see the market going higher first, then that means the fifth was ending here, and this is the zigzag correction that we will see now. Right, so that's about it for our discussion on West Texas Intermediates crude oil. We'll see how it goes. And major thing to keep in mind is that if things don't work out right away, then we can see a wild swing going as high as 83.675, and shorts or more shorts below 77ish levels, 77.7, 76.7, let's say. Nothing much to add here, and let's see if we have any comments on this. If you guys are clear, you can also type in understood or clear before we proceed. Let's us know how the audience is perceiving the speed of this webinar. 1 second. Let me check the LinkedIn feed. We are also live on LinkedIn, by the way, guys. If you don't already know, our LinkedIn page description or connection description is in the bottom part of the YouTube links section. Yes, it is working fine. So let's head ahead and check our charts further. I can see some comments are here. Hello, good morning to you, Philippe, and hello, Marco. Thank you for the confirmation, Sushil, Philippe. Now let's head over and check our next chart, which will be the chart of gold, something everybody seems to be interested in these days. 1 second, where is that? So before we proceed with that, let's just very quickly go over and check the stuff we were discussing on gold in our last webinar. So somewhere over here, we were discussing the chart of gold. Let's see the exact analysis. So the main idea was that the market was progressing in a sideways movement, or you can see this box range. That basically means we are pointing at a flat Elliott wave correction, flat type of Elliott wave correction. And the simple theme was we were still interested in swing longs, less interested in shorts. That was our hypothesis to short below 227. It was the secondary view. Main view was 2440 crossed to the upside, and we look for longs. That was the main view, right? And that was also the conservative view. That is, it will take a lot of time for the market to go and cross that level, and at that point the stop loss will be high. So far the market has still remained within the range. So none of our counts has really given us a clear trade on swing perspective, and that's why let's just look at the real chart to see if we can come to a very clear conclusion, or at least some more clarity on this market, right? So here is the chart, and as you can see, our discussion was on 24th of May. Somewhere over here was our discussion, and this was the count. We were expecting a corrective leg down, basically a box range, as I mentioned, flat correction. Still within this flat correction. Let's see recent developments. Basically, this leg down is what we want to see. So focusing on this leg, we expect this to be an impulse in the downward direction, because we are in a flat kind of Elliott wave correction. And in a flat kind of Elliott wave correction, we expect 5 waves, which should look like this, as I'm drawing on the right hand side. First leg down, second up, third down, four up, and fifth down. So what we have is the first complete here, second complete here. S&P is less than. Okay, I will check it when we get there. Third is complete here. Fourth is complete here. Now here's the thing to point out here. As per my understanding, this is a little bit unclear. We can take the fourth complete and fifth complete, because fifth is supposed to go lower than the low of 3 in general cases, and it has already done that. So that means we can conclude the whole of this impulse already complete, which would suggest that more upside can soon come into play, right? And the second hypothesis basically suggests that the 4 is still taking more time. Maybe it's here, or maybe it's just continuing as some sort of complex correction perhaps. So whatever the case may be, that suggests fifth is still remaining. We don't have any clear evidence. My personal bias is to wait and watch before we take any trade. So it still remains wait for breakout levels. Downside below 2325, we will see if it breaks. We will get some scalp shots there, and to the upside, we already have the level of 2363. If we see a break above this level, then we can look for building up some swing positions, not immediately getting into the whole position, but building up smaller positions, which will later on be built up as we go along. Because keep in mind, the conservative setup is to go long above the last high 2440 plus, right? So that's why I'm saying only minor positions can be taken if we see a move over 2363, right? Apart from that, we have, let me see one more quick thing. Let me see. Comment sections are still there. I'm going to see for listen. All right, Mark. Good to know. Martin is saying hopefully next week we'll see more movement on gold. That's the expectation. But gold has definitely given us way too much of clear movements, so it can definitely rest for now. We have a lot of other instruments which are getting clearer. Martin is sick today. Generally, our most active participant in the webinars. Okay, guys, getting back to our discussions, what we have on gold here is I just wanted to show you quickly the longer time frame analysis here. So we have the one here, right? Two here, three here, four here is the expectation, and that means this new high will be taking out 2440 plus levels, right? That is the general expectation on gold, a newer high. But then again, you already know that if you are following the webinars, we have been tracking gold since quite a lot of time, and the movements have been exceptionally clear. So that's about it for gold. I don't have much to add here. Let me see if there's any point missing before we proceed further. And of course, if you guys have any doubts or questions, this is the time to put them in the comment section. And while I'm checking it, there's a small request to you guys. If you are liking the content presented here, definitely hit the like button, and much more importantly, do not forget to share it with at least 5 of your contacts, your trading communities, Slack groups, Discord groups, WhatsApp or Telegram, or whatever other messaging or social media platform you use. We definitely need to reach more people, and it does take a lot of time and effort to do these webinars, so your contribution will be very helpful, right? And thank you for those who are constantly sharing my work, Sushil, Martin, and the others. With that being said, I think we have covered almost all the points. Just a quick thing. If we see a down move, we expect 2310 to be our marker level or immediate target if the down move continues, right? So that's about it for our analysis on gold. Let's now head over to our next chart, which will be the chart of S&P's 500. And let's see what's going on this chart. Here is the very quick recording from our last webinar, which was again broadcasted live in case you don't know. And before we proceed with the current one, let me just quickly show you what was being discussed in the webinar. So here is the chart, and let's see what was being said. Quickly play and mute it, of course. So we were expecting, that was the higher time frame view. Let me see if there was a shorter time frame view. This one is around 34.28. Okay, so that was the view here. H1 was swing longs, but not right now. We will only be interested above 53.25. We will look to establish that. And I recall we did point out this very important resistance level in our last meeting. A long-term resistance was 53.25. This dotted line still holding. And the idea was that if the market sustains above this level 53.25, only then we'll be interested in taking on long positions, because only then will the market be exceptionally clear. And until then, the bias was that this market can give further downward movement. Let's see here. Yes, it has opened itself for further downside movement, which can take this market lower and give us two legs down. Two legs down in the sense one going below 51, basically taking out this low. We have also had a alert placed here that once this alert line is taken out, we will look to enter the short positions on this counter. That was our take on S&P's 500 in the last webinar, and as such, it has worked out. The market has actually gone lower, and we actually did get an alert right now as well. Let me just quickly show you what's happening here. That is the main take over here. Let me just remove this. We won't need this. And I'll just analyze it from here. We seem to have triggered the bearish view for now. I'll just quickly put in the labels and then discuss it on the MT chart. This is your 3, this is your 4, and this is your 5th. Right now, here's the quick view from this point of reference, which is the price level of 5351. Our last discussion was on 24th of May. 24th of May is here, right? And since the discussion was here, you guys recall we were only interested in longs if the market goes and trades above 5325. So this is 5325. Now, how clear can things be? The market did go to 5325, took resistance on 28th May, and then saw a sell off. This is picture perfect analysis, literally playing out as per our analysis, right? So, if you guys were live in the last webinar, do let our audience know. And if you have been able to track this whole movement according to our analysis, that will be also cool if you can put it in the comments. Now, coming back to our analysis, as we mentioned, only above 5325 will be interested in looking for longs. And if not, then below 52, 58, or whatever this low is, we will be interested in looking for short trades. That's actually what happened. The market did go below 52, 58, and this has continued to show us a sell off. So, what is the count here? A count here is simple A, B, and we expect this to be a C wave. However, do keep in mind, guys, that this may not be the only count, as we have a possibility of a super bearish count, which was pointed out in the last webinar as well, which basically suggests that this whole thing is not a corrective structure, but rather an impulse. And in which case, this is just going to be the wave 1, just going to be the wave 2 here. And this is going to be the strongest leg, which can just continue extending in the downward direction. So basically, long story short is if you are looking for longs, I personally will not be looking for longs right now, at least until we see some clear evidence of strength. As far as shorts are concerned, yes, this is the market to continue trailing if you are already holding shorts. I personally do not have an open position right now. Although when that alert went off, I may have taken one. That was the trigger for entering scalp shorts, but I was involved in this webinar, so I missed that opportunity. Right. So that's about it for SPX. Further bigger downside possible. If not, it can also stop here. Both possibilities exist. Right. Because it has completed the minimum requirement for an impulse to the downside with the 5th leg here. So some more downside and upward movement is possible, or continuation of downside is also possible. That's about it for our take on S&P's 500. We believe no further longs for now. Let me see if there is any further point. Yes, that's one I wanted to point out. On the downside, if the market continues to have a bearish momentum, we expect 51812, 5141 level as our downside target zone or bearish target zone, right? So huge downside possibility, I would say. That's about it for our discussion on S&P. If you guys have any doubts or questions, you can put them in the comments. Otherwise, we'll just move over to our next chart, which is the chart of Nifty followed by BTC. And of course, before we move over with the next charts, again, a small request to you guys: if you are interested in getting more of these webinars, then your contribution is required. To reach more views, kindly share this content with at least 5 of your contacts or on your social media. And of course, do not forget to hit the like button if you are liking it. Thank you, Philippe, for the confirmation. And let's now head over to our next chart, which is the chart of Nifty 50. And of course, let's first quickly check what was being said on this chart last time when we conducted the webinar. So here is the chart of Nifty from our last webinar conducted 7 days ago. So what we were expecting here, let's see, somewhere here. Yes. So that was the clear and simple setup we were expecting. Upside movement. Major view was two more legs to the upside can be seen. So if two can be seen, then at least one should be visible. That was the whole take. The price at that time was 22952, and the setup was very clearly to enter longs above 23,000. If I play the webinar, then yeah, there it is. So setup was long about 23,000 basically. It has since then played out as per analysis. The market, let's just go back a little bit. 24th May was somewhere here. Yes, there it is, 24th May. As such, the market did go above this last high with two swings, one here and then here. Although I have changed the counts a little bit, and but not an issue. The setup actually did play out as per our analysis. This is 23,000 level, and it was breached to the upside, and the market did go up, as you can see already. Although not as high as we were expecting primarily, but then again, I have warned many times, guys, that election results are upcoming and on 4th, so expect not very clear movements and mostly stock specific plays, which we have been doing for quite some time. Anyways, since then we have been able to actually predict this part, most of it, and actually trade a big part of it here and here. And actually it was a big profit movements here on Nifty as well. But coming to the chart right now, what I believe is happening is we are expecting that we are possibly in some sort of wave 4 here. Let me see if I can go to 15 minutes here. So from this point of reference, it does look like we have some sort of 3 ending here and possibly a 4 here. And the possibility of a gap down cannot be ignored at this point, because this 4 structure is actually complete. May not be visible on 15-minute chart, but on a lower time frame, it looks like it may have completed it. And there are some other factors outside of Elliott Wave and outside of this chart which are suggesting that a correction may have completed already. So expectation is that we can see one more down leg from here, right? Of course, I personally will be interested in intraday shorts if we see move below 20,461, and this whole analysis goes out of the water. That is this new leg down possibility goes out if we see a move higher than 22645. So 22645 plus levels for bullishness, and personal bias remains bearish, or what we call as our hypothesis one remains bearish, and expect movements lower than 20,419. Minimum one more leg down, because we are expecting a fifth of the impulse. That's our quick take on Nifty. By the way, I personally believe that once this fifth is complete, we can see some correction, and or if not a correction, then a new leg up is also possible. However, because we do not have any confirmation if it will be just a correction or a new impulse, we'll just have to wait and watch on this counter. What I'll do is quickly make this as a hypo 1, and second possibility is after the correction we see a leg up straight off as an impulse. Keep in mind, hypo 1 is still bearish. After the correction we still expect, let me change the color here. We still expect downward movement. Somehow I can't change it. Hmm. Anyways, so that's about our take. Nifty has itself opened up for possibility of downward movement. If not, at least one leg down is remaining. A quick view here. The downward movement can be contained by this box range. So anywhere within it, we expect it to stop, generally somewhere around here. Roughly speaking, basis on support and instances which we are seeing 22, 250, 240 something level is where we can expect the market to stop. Let's just mark it. So that's about our analysis on Nifty 50. As I pointed out, both possibilities. We'll just wait and watch how it goes. Seems to have some questions here. Let's just take them very quickly. How many years to trade? You are so great. Oh, thank you, Marco, for the comment. I've been trading since 2015, right? Actually, 2015 is when I started the YouTube channel. So that's from where I have a online record. I started trading in 2014, back in 2014. Almost 10 years. Actually, 10 years. Think about prop firms. It depends on the firm you are talking about. A lot of things have to be considered. Name, reputation, their past record. Are they legit or they are just there for taking money for the fees of the challenges? A lot of firms are seemingly doing that. So can't comment on just this much information. Okay, so that's about it for our take on Nifty. And let's now head over to our last chart of BTC. Say Bravissimo, I don't know what that means, Marco. So maybe if you can type it in English, I'll know. Let's now head over to our last section, Bitcoin. So here's the recording from our last webinar on BTC. Let's see what was being said before we proceed with the current version of things. So BTC, here's the chart, and our take was rather very unclear. We were expecting sideways movement, and these were the box ranges we were expecting the movements to come out in. First box range was, as you can see, the last high, and there could be some expansion. So long story short, there wasn't a very clear setup on Bitcoin in our last discussion. However, some clarity has appeared since then. So what we'll do is very quickly look at the real chart, or the current chart, I should say, and see what is the clarity I'm talking about before. So here's Marco's comments. You are very thank you, Marco. Thank you very much for your comment. So here is the chart of BTC with some clarity. What we are seeing here is the possibility of a, let me just explain it from this point of reference. So here is the price level of 56,531 is our POR. Right. So from here, there's the possibility that if this is an impulse, actually it's getting relegated as we speak, then this 4 may be a triangle. That was the possibility I'm talking about. Still not completely relegated. But if this is a triangle, then we look for longs above the level of 70,674. Like this, right? That is the main possibility on 1, 2, 3, 4, 5 impulse progression in Bitcoin, right? And it will get relegated if we see a movement below 66,379 invalidation level of this count. So long story short, that's the clear setup we have so far, and very clear 7674 plus we look for longs. Otherwise, if it goes straight below 66,379, then this count gets relegated. So that's our quick take on BTC. It has been unclear so far, but small setup I saw and thought, why not discuss it? With that being said, we have covered all the major things that we cover, and I've seen all your guys' comments so far. If you have any doubts or questions on this discussion on BTC, you can just post them in the live chat. Otherwise, thank you for staying till the end, and of course, again, a small request: if you are liking this content, make sure you share it with your friends, colleagues, at least 5 contacts, or social media if you are using Twitter, LinkedIn, Facebook, or whatever social media you guys are using. We definitely need to reach more people, and it does take a lot of time and effort. So I will appreciate your contribution in helping me reach a bigger audience. And lastly, the small course on Elliott Wave, which is free, is still available. You can see the link scrolling at the bottom of the screen, 50hours.com/V. If you are not interested in going through the whole detailed course, which has 1600 plus students, you can just check the free video course by visiting the link. As I said, it's scrolling at the bottom of the screen. And that will allow you to have enough understanding to understand these webinars at a certain level so that you can at least know what I'm saying or talking. That's it, guys, for this webinar. Thank you for staying till the end. And as always, I hope to see you in the next one. Take care.